Hi, it's Mathis Connor with Connor Management Group, and this week we're going to look at the best overvalued stock to sell right now. Today is Thursday, March 6, 2014, and the industry this company is in is the education and training services, and we see this company is having a 12-month downside potential of negative 35.7%. And on to the second slide, we see that the name of this company is Bridgepoint Education. Bridgepoint Education, their ticker symbol is BPI. Once again, the industry's education and training services, and their 12-month downside potential is negative 35.7%. On to the quick facts slide. Here's the business summary for Bridgepoint. Bridgepoint Education, together with its subsidiaries, provides post-secondary education services. Its academic institutions, Ashford University and University of the Rockies, offer associates, bachelor's, master's, and doctoral programs in the disciplines of business, education, psychology, social sciences, and health sciences. The company offers its programs online as well as at its campuses located in Clinton, Iowa, and Colorado Springs, Colorado. Additionally, we have, as of December 31st, 2012, it had 81,810 students enrolled, and they offered 1,470 courses, 80 degree programs, and 125 specializations. Their website is bridgepointeducation.com. That's www.bridgepointeducation, that's altogether.com. Bridgepoint is headquartered in San Diego, California. They were founded in 1999. They have 4,120 employees. The ticker symbol is BPI. The sector they operate in is services. Their industry is education and training services. Over the last 12 months, the annual revenues were $815 million. Over the last 12 months, the net income was $66 million, and the cash from operations was $104 million. And their market capitalization was $1.05 billion. Okay, so, this is a company that we expect to pull back quite a bit, and as you can see, they have sizable revenues, and they have positive net income as well as positive cash flow from operations. And we expect this to pull back, as we'll get into it, because the expectation is that, based on its outlook, the stock is presently overvalued. Onto their products and services page, we have a picture of the Bridgepoint Education logo. We have a picture of their main building at the University of the Rockies, and a picture of the main building at Ashford University. Additionally, the Ashford University recently renamed its business program the Forbes School of Business, and it's our understanding they made a one-time payment of $15 million to Forbes for the use of their name. Also on the slide, we have pictures of the top two executives. We have a photo of their chief executive officer. His name is Andrew S. Clark. We have a photo of the executive vice president and chief administrative officer, and his name is Rocky Sheng. Additionally, we have two excerpts from two slides from their November JP Morgan presentation. one slide describes the student body, and it turns out that 99% of the students are online, 71% are female, 48% are minority, and the average age is 37 years old. Additionally, we have a slide of their historical cash flow and expected earnings per share over the last 5 years. The earnings per share, as well as their net cash from operating activities, increased from 2008 to 2011, and it since it declined in 2012, and it's looking like it's going to decline also for 2013. On to the metrics slide. Once again, the annual revenues over the last 12 months was $815 million. The net income was $66 million, and the cash from operations was $104 million. The operating margins for Bridgepoint in 2012, the operating margins were 22%, and in 2013, the operating margins were 16%. So that's quite a decline in operating margins, that's for sure. The trailing PE ratio, now looking at the valuation metric, the trailing PE ratio is presently at 16.1. Doesn't sound too expensive, but the forward PE ratio is expected to be, well, now stands at 28.0. So from 16.1 to 28.0, that tells you that the average analyst's expectation is that the earnings are going to decline. The PEG ratio is negative 0.5, also consistent with negative growth. The price to sales ratio is at 1.3, the price to book at 1.9, and the enterprise value to EBITDA is at 4.6. So, these valuation metrics don't say that they're outrageously expensive right now, that's for sure. But the outlook, as we'll get into, is just not all that good right now. Yesterday's closing price for Bridgepoint was $19.38. The 52-week low was $9.58. And the 52-week high was $20.33. The 20-day moving average was $18.54. The 50-day moving average was $17.95, and the 200-day moving average was $16.69. So the recent closing price is reasonably close to its 52-week high. And it's also around their last, let's see, 200-day, last six to 9 month moving day average. It's a little higher, $19 versus $16. But this stock, as you will see, has been somewhat flat over the last 6 months. The average daily trading volume for Bridgepoint is 358,000 shares. The beta of the stock has been 1.7. Means it's been a little more volatile than the market on the upside and the downside. The dividend yield and the average payout ratio stands at 0%. They're not paying any dividends. Here's a price chart for Bridgepoint, and what we see is back around the beginning, back around April of last year, the stock was around $12.50, and around July it made that drop down to its low of around $9, and then in mid-July it jumped up to around $16. So from a low of $9, let's say actually in late June, to mid-July, it jumped up to around $16. And what that jump had to do with was that Bridgepoint had lost its accreditation 1 year after having it for about 5 years, and then the announcement came that they received their accreditation again. Actually, I should say Ashford University, not all of Bridgepoint. It was just Ashford University received its accreditation again. There were some issues related to student retention and having required amount of full-time faculty. Those were the issues back then. So from mid-July, of a price of around $16, the stock made a somewhat steady increase to $20 until early November. And then in early November, it made a kind of a somewhat fast and hard fall from $20 to around $16, and that decline was related to earnings. I guess the stock just got ahead of itself. Earnings weren't as strong as were expected, so it made a pullback. So after that, in early November, that pulled back to around $16.50. The company made an announcement that they were going to start to reacquire some of the shares. So stock jumped back up to around $18.50. And from there, it declined a little and raised back up to around the $19 where it is today. So that's the historic price movement for Bridgepoint. But looking at it, over the last 6 to 9 months, the stock's really kind of been trading in a range, which I'd consider it fairly flat. On to the next slide. The financial statement quality of Bridgepoint is fair. The good thing is they don't have any debt, but there's just an expectation of a strong expectation of a continuation of declining enrollment of students. So they're using some cash, as mentioned, to repurchase shares, which could stem some price decline, but we don't think it's going to offset the pressures for a strong price decline nonetheless. The operating margin trend, as we discussed, it's declining. I mean, it was at 22%. Now it's looking like it's going to be around 16%. So that's not too favorable. The price pattern trend, we just talked about that's basically been flat over the last 6 months. Overall market outlook still is somewhat bearish. So if the market pulls back, Bridgepoint isn't necessarily a strong candidate that I would see too many people holding on to if there's a strong bearish move. The recent closing price for Bridgepoint, as mentioned, is $19.38. And based on earnings outlook, we see the 12-month price target for this company could be around $9.60 is what our model says. So that's a 12-month pullback of actually around minus 50.5%. So we're going to have to fix the edits on the slide to the correct 12-month potential is minus 50.5%. Basically, Bridgepoint is operating in the educational services industry, for-profit schools, and there's just a lot of pressures on the industry right now. There's economic uncertainty, and students aren't enrolling. They're concerned about taking on more debt, and additionally, the government through the Consumer Financial Protection Bureau is putting these for-profit schools on a lot more scrutiny. So the pressure's on. Basically, the Bureau is saying, all these students are incurring lots of debt, and some of these schools you're bad players because a lot of your students are not are defaulting and they're not getting these jobs, for which they went to your business to improve themselves. So the headwinds in this industry is not positive right now, and Bridgepoint they're part of that industry trend. I mean, their revenues are projected to decline for 2014 from 2013. Their earnings are projected to decline from 2013 to 2014, as are their revenues per share and their cash flow per share and their earnings per share. And that's despite the projected repurchase of shares. If the share repurchasing was going to happen, those per share declines would actually be even stronger. So we feel that Bridgepoint is a stock that you could consider shorting over the next year to make a profit, or buy a long-term put option, or a combination of options, betting that this stock will decline. So Bridgepoint, we feel, is the best overvalued stock to sell right now. And on to our last slide. It's just a reminder to go to our website, www.gmcstockpicks.com, to sign up for our free newsletter and learn about information about the stock market in general. And you could be among the first to hear about these types of investment opportunities. These Bridgepoint, as well as our other picks, are all the result of using our proprietary algorithms that look at over 3,500 stocks every week, and we rank them based on appreciation potential. So we identify those stocks that have the greatest potential to go up, as well as those that have the greatest potential to go down. And this week, Bridgepoint is the one we view as the one with the greatest potential to decline. So we hope you've found this presentation of use. And that's all we got for this week. And take care, and we'll talk to you soon.